Hi, my name is Dr. Scott Young, and I'm here with Jeremy Whaley. And what today we're going to talk about is the QFS and XRP. Coming right up. Okay, so I want to start off with Jeremy. I first want him to talk about himself a little bit. I know everyone loves to talk about themselves, but Jeremy doesn't care. I can just tell that with his attitude. He's like, let's talk about other things. But I really do want people to know a little bit about what you do and why you've come and how you've woken up to the world with that. So go ahead.
Okay, it's probably a loaded question, but I hate talking about myself. So thank you very much for this opportunity. Yeah, my background, I started my adult life as a musician and was relatively successful in that field, but I learned pretty quickly that a successful musician lives in poverty by the world standards. Yeah. So that kind of led me down some different roads, and through unique circumstances, I ended up in the world of trading. And so I have a very deep and unique background in the financial space, specifically with trading stocks and options, which has now moved over to cryptocurrencies and other things. And in that, multi-year journey, multi-decade journey now, I've just figured out a bunch of stuff. And so, how I got into this red pill world, it started many years ago when I started teaching trading to people. And what I started discovering is all these associations between market movement and news media, they don't make sense. And the news would say one thing and people would make these connections. And I'm sitting here saying, no, that has nothing to do with why this trade just moved. And that was kind of my first awakening to the fact that the news was fake. And at that point, I was a pretty good news junkie. But, now I realize how fake all of it is. And it's just been like a lot of people, it's just been a multi-year process.
Right. And so, it's kind of weird because I started as a vocal performance scholarship major.
I'm so sorry.
I know. And then, but like 6 weeks, I like literally 4 weeks into it, I'll tell you this and you'll love this. She pulled up Michael Jackson Beat It. This is 84. So, and I'm like, and she's going, and I don't remember how she said it, but she said, and he transposed to a B flat. What? I didn't hear it. I couldn't see it in my head. She's talking about this. My music theory was just done, and I was done too at that point. So yeah, I just couldn't keep up with it. I've sang on stage thousands of times, but I couldn't do that kind of stuff too. What kind of musician are you?
Well, piano is my instrument, but professionally I worked as a producer and had a recording studio and did all that kind of stuff. But my degree was in music theory. And
oh wow!
Vocalists are notoriously worthless in music theory.
Oh, so they're horrible. And then I played rhythm guitar, which means you have no rhythm,
and you can't read music.
You can't read music because I could just write down the G and I would, and then put the A minor, and I knew what that was. So I knew the transition, and I get it. Yeah, we're all idiots on that stuff.
At least you weren't a drummer.
Oh God, yeah. Well, at least at least a drummer could lay the background of that, But we'll see how.
Well, what they say about drummers who make a living, or what do you call a drummer who makes a living?
No, I have no idea.
Pizza delivery boy.
Yeah, well, we actually do in-ear monitors because I'm an audiologist, and I have this guy, and he won't care if I say his name, Matt Donaldson. He's at Drum World here in Tulsa. And these are thick little things, and he's a violet drummer, and you'll know exactly what I mean by that. He gets a stick and caught in one of them and snapped the sucker in half. And I had to beg the manufacturer to, fix them for him. So yeah, it's fun.
My goodness. Well, I'm probably going to need your services eventually, because the older I get, the more tinnitus I start to notice. And sometimes it's just like, what is that? And I realize it's just me.
Yeah, exactly. That's the C sharp, yeah. So anyway, so talk a little bit more about the teaching and trading. Tell me a little bit about, because you're saying, your red pill event in there. What can you explain that a little bit more with the trading and how it was working in there too? Because I don't think most people understand that.
Well, whenever you read, like if I pick up my phone and I look at headlines, let me do one right now. I'll give a perfect example. So okay. I'm just going to open my stock app. Apple stocks.
Right.
Stocks end lower as Ukraine tensions melt. What the headlines do is they make an association, but Ukraine and the stock market today had no association. There's nothing connected to those. But if you look down this list, that one's from Wall Street Journal, Barron's, Russia and Ukraine affects these commodity markets most. Well, Russia and Ukraine have nothing to do, whatever is going to be in that article, I guarantee it.
Exactly.
But these articles define the narrative, and you can control the narrative with the headline. And so what I started seeing is, I teach technical analysis, which is basically human behavior through stock prices. And we're remarkably accurate with where trades are going. I mean, I've been predicting this market reversal that we're in right now since November, completely agnostic of what these headlines are. Right. And what I can tell you is when a major market turn comes, there will be a headline, and they probably will not be connected, but everybody in the world will associate them. And a perfect example of this is, if you go back a few years ago when Occupy Wall Street was happening, and I mean, there's people literally dying in the streets protesting capitalism, but the market kept going up.
Right. If
the market had gone down, the headline would have said, markets crash as Occupy Wall Street threatens capitalism.
And every time you see it, I mean, if you got a 200 point dive, they're going to make up one thing or another, like COVID concerns make it, drop it. If it goes up, COVID eased or whatever, and you're going, what does that have to do with the stock trade?
It has nothing to do with it. And so I coined a phrase that I started teaching my students to pay attention. We have the markets that are set up. They're set up through behavior, and we can see the patterns that are happening. And then we say, you're looking for a news event, but the news comes with a direction. It doesn't come with a price. A perfect example of this that people can associate with is 9/11. When 9/11 happened, markets crashed. Okay, they shut everything down, markets crashed. Now, one would think 9/11 was killing the economy. So you had stocks like Best Buy and at that time Circuit City that were crashing along with everything else. But myself, I was working in a recording studio at the time, and I didn't have a TV. So I rushed out to buy a TV so I could watch all the news while I was working. And guess what? There were no TVs because everybody was buying TVs.
So how could they be crashing?
There's no association between this retail stock should have been crashing because this event surged their sales. And so I started just putting these things together. Like, wait a second, something doesn't add up. And I realized that news comes with the direction, not a price. There is no valuation that says a plane going through a World Trade Center tower should devalue Best Buy by 32%. There's nothing that makes that connection. There's no correlation. News comes with a direction. Okay, it was a bad event. People freak out. Okay, it just triggered something that was already set up, but something else justified the move.
So let me ask you this, and I mean, we're now I'm going off in left field, and we'll see if you like this one.
But, we'll land the plane eventually.
Yeah, exactly. So like, tell me about shorts, like AMC shorts and things like that. Do you can you explain that for people, because they're always looking at it going, what?
You don't mean Bermuda shorts?
That too. I mean,
people don't understand.
That's the only thing I wear.
What?
That's the only kind of shorts I wear, though. Yeah. No.
So people don't quite realize that the free market, in order for the free market to be free, you can't just have people buying stocks. If people just buy, then you'll actually have runaway prices. You'll have bubble after bubble. And when they pop, you'll have massive volatility. One of the reasons we see so much volatility in crypto is because we have way more buyers than we have people that are shorting. Right. What the short sellers do is they actually provide the liquidity. That's a fancy term to say they provide the shares when somebody wants to buy and there's nothing left to buy. So what short sellers do is they look at the situation. They say, well, I see people are paying too much. I'm going to sell some stuff, but I don't own it. So where are you going to get it? Well, they borrow it from the broker. Now, somebody might philosophically say that should be fundamentally illegal, but it's not. And there's a reason it's not, because it creates the free market that we have. And again, I come back to, if we didn't have that, we would have runaway prices. So if you want me to go deeper in that so people understand that better?
Yeah, no, that's great.
So imagine a few years ago, if you can remember when the iPad came out, iPads came out, everybody was all ablaze about the iPad. So cool. And then the iPad 2 came out. And I remember this like it was yesterday, because this happened to me. I go down to the local mall, and I go into the food court, but there's a line all the way through the mall. And I'm like, what's going on? Well, it was the day that the iPad 2 was being released. Yeah. And this line went from the Apple store all the way through the mall down to the food court, and it doubled back about halfway through. There were people standing in line with their iPad to buy an iPad 2.
Yeah.
Because of the cult following that Apple has. Now you say, what does that have to do with selling short? So Apple, they lock the doors till 5 o'clock. They create massive demand. Everybody's lined up. They open the doors at 5 o'clock. Mad rush, they sell out. Half the line doesn't get an iPad too.
Yeah.
So what do? They go home all sad. They've camped out. They have all this emotional desire for an iPad that's worth maybe $1,000. And there's some people at the front of the line that saw the opportunity and they say, you know what? I'm going to get on eBay and I'm going to sell my iPad for more than I paid for it. And they start bidding the price up in a free market. And so the free market, it carries the price of the iPad much higher. Well, there's only a limited number. You have all these people that want it. So they start bidding it up. And it's $1,000, $1,500, $2,000, $3,000 for an iPad that's not worth it. Well, Dr. Scott over here, he sees this and he's like, that's crazy. Why would anybody pay $3,000 for an iPad? I know in about a month I can buy it at Best Buy for $1,000, right? So Dr. Scott, he starts talking to some of his patients, and one of his patients says, you know, I bought my kid an iPad, couldn't believe they had him, and I'm going to keep it for his birthday. Dr. Scott says, hey, could I borrow that? I promise you'll have it back by his birthday. That way he won't find it. And your client says, sure. So you go on eBay and you sell it for $3,000. And you say, okay, now I am missing one iPad. I'm short an iPad. I sold it. I don't own it. I borrowed it and I sold it. I received the $3,000. Now someone says, well, what if you get caught? Well, Dr. Scott is going to have to cover himself.
Yeah.
So Dr. Scott, if the iPads never come back in stock, prices will soar. Dr. Scott's going to have to go out and pay $4,000 for an iPad, and he's going to lose $1,000. Or as prices come back down, a couple months later, he's walking through Best Buy. Hey, look, there's the iPads. He picks one up, pays $1,000 for it, has a $2,000 spread. You made $2,000 profit. Go back to your client and say, hey, here's your kid's birthday present. Glad I could custodian your present for you.
Right.
That's the way short selling works. Now, someone says fundamentally it's wrong, but if you had not provided liquidity at 3,000, there would have been a smaller number and prices would have gone even higher. Prices would have been 3,500, 4,000, 5,000, because prices are always determined by one factor, and that is what someone's willing to pay for it.
Yeah,
if
really.
people are willing to pay higher, they're willing to pay higher.
Yeah.
So does that make sense?
And it's all about that. I mean, obviously we know supply and demand has some of that too, but yet some parts of that don't make sense either, you know, and this is some of that stuff. I mean, it's manipulated kind of information in there too. So when you think about like this AMC kind of stuff that, you know, these guys are buying it at a very low price when they did buy it, $9, you know, from what I'd heard. And I think it was last January, wasn't it?
I forget the date, but yeah,
something like that. And then, or no, they're like, no, December of 20, and they bought it $9, and then the suckers sitting at 50, $60 or more a share. And so, I mean, and what are they hoping to accomplish in that way? I mean, those holders.
Okay, so what happened in that situation with GameStop and AMC? There was a very large group on Reddit that got together, and they basically created a decentralized consortium. It's a bunch of individual investors, individual traders, and they said, we're going to buy GameStop, we're going to buy AMC, and there was a handful of other trades. And they said, we're going to buy all these stocks because there's a short imbalance. And what they were doing is they were looking at the spreadsheets and the balance sheets of some hedge funds, one in particular, that had taken a huge bearish short position against GameStop and against AMC and against these positions. And they're looking at them, they're betting that the stock's going to go down. Well, whoever organized this thing looked at the numbers and said, you know, we have enough people. If we just buy and we won't sell, then Dr. Scott can't go back to Best Buy in a few weeks and buy his iPad back. Instead, prices have to go up because there will be a shortage of supply. So that's what they did. They started buying AMC. They started buying GameStop. There was no supply to cover the shorts, and prices kept rising. And then as the short sellers have to come in and buy, guess what happens? Prices have to go higher and higher. So something that people don't realize about short selling is when you short, you have to cover at some point. There's not a specific time frame, but you do have to cover at some point. You have to have a certain amount of money. Yeah, it comes due. And there's a certain amount of money called margin that you have to keep on reserve. And that is 150% of the value of what you shorted. So if the price goes from 10 to 15, well, that was your entire margin. You're going to get a margin call. They're going to say you either have to liquidate it or you have to put more money up. Well, the price didn't go from 10 to 15. It went from like 10 to 50. So you get a margin call, and now instead of having $15 a margin per share, you've got $75 a margin per share. It was so bad that the hedge funds that were doing this, one in particular, I forget the name of it, they had to do a capital call. And this is where it got really, really big, because that fund was owned or somehow tied in with Citadel, who's a market maker. Well, Citadel is the market maker that's been paying Robinhood under the table so that Robinhood could provide free trades. So Citadel puts the money up for the fund, and they say to Robinhood, we will not provide any more liquidity for this trade. We will not do trades for AMC and for GameStop, and you're going to stop filling the orders, or we're going to stop all of your orders. And so then suddenly Robinhood is exposed. They weren't protecting the little guy. They were always in bed with the big guy. And now you have people that had legitimate money at risk, they had legitimate profit. They couldn't get out of it. And Robinhood screwed the little guy. And they did it because behind the scenes, they weren't free. They were actually in bed with the very people who created the problem. That makes sense?
Wow. Yeah, no, it's pretty scary too. And you know, that little bubble hasn't really hit. There's a movie back in the 80s, I want to say, called Trading Places with Eddie Murphy.
Yes.
And that is related, very much to this. I mean, I think Hollywood loves to show, their cabal roots and tell you things that are happening. And that's one of the things that I think is going to happen down the road, is they're just going to be with their short stamp, Bermuda short stamp, actually. So,
well, yeah, I mean, so that process is called a short squeeze. You're basically squeezing out the short sellers because you force them to cover, and their own need to cover forces the price to go even higher. And you just squeeze them out. And it's the worst case scenario for a short trader. It's very rare that it happens. And frankly, I'm in favor of the Wall Street Bets group that pushed it out, because these hedge funds, they are in many cases manipulating the markets by doing, it's not like you or I go in and do a short trade. We might do a couple hundred shares, but they come in and they do millions of shares.
Yeah, right.
And that's what happened. And then that suppresses the price for everybody else.
Wow. See, that's a cool stuff. And I think we're going to start seeing a fundamental shift when we talk about the QFS. So tell me a little about what you know about the QFS, and let's kind of see what we come up with there.
Well, I have very little insider knowledge on it. So most of what I know is what I've pieced together from the internet. And I do have a personal connection. So I'll just throw this out there. I have a friend that's not a best friend, but an acquaintance, a guy that I've spent multiple 4th of Julys at a pool party with. And he is, I don't want to say dating, it's probably not the accurate term. He's very, very close to a young lady in Australia whose company is working on integrating the QFS with global international banking.
Wow, that's cool.
And my understanding from my contact is their team actually answers to the Trump team directly. They're on the phone with them every week. So that's my connection. And so what I get from my contact is I get smiles and no, that's what I get. Those are my confirmations. And I can tell you, my friend, he's a pastor, and his contact in Australia, she has actually, I guess my friend's on payroll. He says he's under NDA with them, and they provide a prayer covering for this entire QFS integration team in Australia.
Wow.
So he does have a lot of insider scoop. He is on the phone with them almost every day, but I don't get direct intel. What I get is confirmations or no. So whenever people some of these internet people come out and say, hey, this is going to happen, and that's going to happen, I'll sometimes say, hey, this is what I heard. And he's like, that's about the intel I get.
Do you know when I was working, and I won't say this because I won't say all the thing because it would compromise my dad, but I was working with my dad, kind of got nepotistically in the job in college, right? And we both had badges, and there was something on the bottom of his badge, I won't say what it was, and we're driving to work because it's like a really long drive, and so I looked over, I'm like, Dad, does that mean you have like a secondary access? And because I knew he had really top secret access, but he, his badge did not show that overtly, right? And he had this little thing, and he literally did this. I'm like, That's all I needed. I'm like, thank you. Yes, sir. And I mean, just shut up and I'm going to keep driving, because that's all. And that's what you're talking about here.
That's exactly it. So there's a lot of things tied to the QFS that I've been able to deduce from Q&A and I will say this. I mean, I know it's real because I've been able to, I was given a recording of 2 different conference calls. And I've heard their conversations. I know it's real. I know she's telling the truth. So there's no reason for any of them to lie to me. So I know that aspect of it's real.
Right.
And I know that my friend's on the inside. I'll keep his name anonymous just in case, but I know he's on the inside. But I asked things like I can tell you that he's very big on the dinar. He's not really big on a lot of the other currencies. He does say that other currencies will revalue. When I ask about the ZIM, he's like, it's like, maybe, I don't know. I don't think he really knows about the ZIM, but he's not very sold on it. The Bolivar? He's like,
yeah.
Like, okay. And, some of these things, they just come up and they spread like rumors all over the internet. I can tell you my own background in crypto. A lot of the rumors about XRP and stuff is just not true. Just not true.
So talk a little bit about crypto, because I think there's so many people who don't get it. I mean, I'm going to set the thing is that we have a fiat currency that's a dollar bill that is based upon, debt.
Yeah.
And so its whole point is debt that feeds back into the system, which is part of the inflationary points. So the more debt you have, the greater the inflation, which reduces the value of the dollar, increases the price, in essence, to things with that. So that's a real simplistic way of that. But can you talk a little bit about why crypto actually occurred, starting obviously with Bitcoin, and then the other ones sort of jumped in there too, right?
Crypto is a natural evolution of the internet. And, that's what a lot of people don't understand, is that crypto in and of itself is a technology. And the intrinsic value of crypto is not necessarily the currency value. That's part of the investment value for us. But, people keep saying, I don't see how I'm going to go spend it. It's digital. How am I going to go spend this thing? I don't understand how if I have this one Bitcoin, I can go to Walgreens and buy my prescriptions. Well, forget that. That's actually not the outcome here.
Right.
What Bitcoin was created originally, if you read the Satoshi white paper, it was created as a peer-to-peer ability to transfer. So if I say to you, Dr. Scott, I want some hearing aids, and you say, okay, send me $50 or $50,000, however much your hearing aids are. I say, okay, well, how do I know that I'm going to send Dr. Scott $50,000 and I'm going to get some hearing aids back?
Right.
And I say, okay, Dr. Scott, that's nice. You send me those $50,000 hearing aids. I'll send you $50,000. And Dr. Scott says, well, how do I know that you're going to give me my $50,000? So we end up with this centralized third party who is neutral.
Right.
In real estate, we call it escrow. You put your money into the escrow account and somebody's paying it back.
Right.
So what Bitcoin was and is created as a way that I could say to Dr. Scott, here's your money, and it could be validated. But instead of having a central point of failure, such as a PayPal or such as a whatever third party, it's decentralized. And so you have 3 points of validation. Those 3 points of validation are 3 autonomous computers that are anonymous. So they're individual and nobody knows who they are, and they're different every time. They all do the computation. They compare them to each other. And when the comparison is completed and it agrees upon itself, it says we can enter this. Scott did his part. Jeremy did his part.
Yep.
We can complete this transaction.
Yep.
That's peer-to-peer with a decentralized autonomous third party.
And it's trackable for each part of this.
Yes.
And even trackable all the way to, Scott goes off and uses some of that money to this and that, it's trackable in there so that we know that, it wasn't used for nefarious purposes, kind of thing, right?
Well, if it was you, I don't know. I can't say that.
Yeah, exactly. Well, I don't know. You can see that one too. And so I'm going to throw in this thing. When my guy was talking, who knows a lot of the white hat families, these are deep families, the dragon families that have actually are part of the funding underneath the NESARA kind of thing. And Trump. Yeah. I mean, Trump's not the only person. He's guiding and directing, but he's like, in sense, the showman. Okay.
Right.
He's the stage guy. But there are people that will never be known that are doing this great service with this. And so my my guy was listening to information back in 2013, 2011, and he's like, I want you to read this book on Bitcoin. Okay. And so I'm reading through it. I'm making just a load of notes, and I start to understand the cryptocurrency, that the blockchain kind of points and there, and I'm like, so is Bitcoin the vehicle, of this new money? Because we didn't even have an answer for it, because we didn't know it was, QFS. We didn't even have the word, right? And all we had heard, I've been hearing, was a gold-backed currency. Even in 2012 is the first time I ever noticed that. Now, obviously, people have been hoping for it for a very long time,
right?
But they had no tie directly to this. And then when I said Bitcoin, he goes, nope, because it's manipulated by the people that own the stock, or own into it. And actually, 50% of all transactions are sex trade issues and drug trade issues as well. So it was created by the CIA to kind of to fund some of that stuff too.
Right.
So go a little farther when we kind of move. Why did we jump out of the Bitcoins into the crypto kind of thing? I mean, into the XRP things, for instance.
Well, Bitcoin was kind of just the first validated model, if you will. Right. And I can't speak to what percentage is used for nefarious things. I mean, I think evil people are going to use evil stuff. I use a knife to cut steak because I like to eat meat.
Right.
My wife is a vegetarian. She uses a knife to cut veggies. Right. I think that's a crime against veggies. Knives can be used for various things, but it doesn't mean that the knife is right or wrong.
Right.
In the same way, Bitcoin, I don't know if CIA created it or not. Maybe they did. But what I can tell you is this year, the last year and a half, 2 years, we've had a surge of institutional money, and that's retirement money. Like that's people that have just been putting money into retirement. So I can't say today of the, fluctuating market cap, 700 billion to a couple trillion different times, 1.2 trillion. I can't say what percentage of that has been used for nefarious stuff. What I can say is it proved a model. It proved that you could do this digital stuff. Right. And then that opened the door for all these other currencies to come out. But we use the term currency, but what that really is it's probably the best metaphor is train tracks, if that makes any sense. Like if you go back to the late 1800s when railroads were taking over the country and you had to lay all this railway, because the railway was how we moved the cargo. And so you have, you need to move a load of freight from Pennsylvania to Texas. We have to have railways to get there. Well, it costs a lot of money to build railways. And so what they would do is they would, through stock issues and other things, raise capital for the railroad companies, and they would build the railways. Well, what if they sold you the railway? What if instead of investing in the company, you actually bought a 1-inch square section of track, right, or a mile? And you say, well, what am I going to do with this train track? It's worthless. Well, no, it needs to be used to move the freight. So we're going to lease it back to the company, and now they can use it, and you're going to get paid to use it. So in that way, you can have millions of owners of the railroad tracks themselves, and you put them up to be used by the railroad company so they can move the data. Those tracks are the digital metaphor, or the metaphor for the digital currency. The currencies, the tokens, it's the data packets, it's the railways that we move the digital information from point A to point B. And so when you come to like XRP is a protocol, it's a digital protocol put together by the company Ripple, who is working on international financial things. And XRP is the digital railways, if you will, that move data from point A to point B.
Right.
That makes sense?
Yep. So when people are struggling, because when they hear this, especially in the Great Awakening conversations, they're saying, and this is where you and I kind of met, through another friend of ours named Kevin, and and Kevin actually said, I need to talk to you, and so the conversation now is the QFS, or the quantum financial system, which is the backing of this new gold currency that you and I both see as a U.S. Treasury note, because the Treasury's got to take it over instead of having, the evil Fed, doing their job and directing all the currency points. So they're saying the QFS, or sorry, the XRP is going to be the vehicle for the QFS. And how would your response be on that?
Maybe. I can't say it is. I can't say it's not. And I don't have any issue if it is. I could see it being used as that. I think it will remain a third party. And I don't think it's going to become a U.S. Treasury tool. I think, in my opinion, this is totally my opinion. I think whatever the QFS token is that moves back and forth, probably it will interface with XRP. XRP may be the token that they use for international trade. It's kind of like saying, if the US dollar is the money today, does that mean that XRP is invalidated? No, you don't move the US dollars, you move the data through the train tracks.
Right.
And so XRP is the train tracks. And I haven't really taken issue with whether or not XRP is used by the QFS or not. I've not taken issue with that. What I've taken issue with is these stories that go out that say XRP is gold backed, and they come right behind that and they say XRP is going to surpass the value of Bitcoin. And those two things cannot be true, because the reason gold goes up is because the fiat's going down. Gold doesn't change value. 1 ounce of gold's always worth an ounce of gold.
Right.
And it's just, there's just so many rumors, and they were started by people that have on their own admitted they were disinformation. So I wish I could dispel it all.
And so, I mean, you're saying that the basic vehicle, it could be, QFS could have its own vehicle. It could have an XRP type of vehicle, could have, Joe's vehicle, as far as we know.
Right.
Necessarily, I guess where I struggle with, and help me see this more correctly, because again, this is not my area, and that's why we're talking with you with that. But my struggle in this is that if I own a piece of that train, okay, and let's say I own 1, square mile of that train track, and it's just for the train track, responses. If we flip this thing from just XRP kind of thing, which is still a limited amount of worth in this way, and now open it up to the full economy, in essence, that's when we hear this thing of XRP to the moon, which means that if I own a 1 mile of that train track, for instance, and you own 18 miles of the train track, you actually are a bigger driver in the full out economy than I am. And I would be saying, wait a second, doesn't that get us back into another cabal type of response? Is that, am I off on that? I mean, because I'm happy to be off on that issue.
No, you're not off at all. I think that's why XRP is not going to be used by the QFS.
Right.
I think the fact that what you just described is exactly why it can't be the main protocol. There's a lot. I mean, the biggest thing for us to remember is we don't know what we don't know. And anything that we don't know is projection.
Right.
So why would we be spreading projection and putting together these little memes that say this is what the QFS is going to be, and XRP and XLM, which XLM is not XRP. So that's a whole nother one. They're saying XRP is going to be tied to gold and XLM is going to be tied to silver. Well, no, it's not. And you really don't want it to be. The truth is, if it were tied to gold and silver, it can't moon.
Yeah. And that was, I think that's where the biggest struggle I've had when I've talked to these people, and they just get super mad. You and I both watched this.
Vigilantly mad.
Yeah, digitally mad. And I mean, it's funny because they're always 10 feet tall on the digital, realm. And we used to talk about that on the phone. People are always 10 feet tall on the phone, and they'll cuss you out really quickly, with that. And yet, I guess, and that's the key, is because, the cabal has actually created a situation where they control every transaction out there, in essence. Yeah. Not saying that they, take away transactions, but, I always talk to people about this. One of the things that, as I started to get known, I mean, in this particular space, I was starting to get information from bankers who were telling me that every single loan has to be filed through the Fed.
Yeah.
I was like, what? I mean, why would you have to do that? But I always liken it to like the trade. There was a trade, I want to say it was Chris Paul that was traded in NBA, traded from Houston to the LA Clippers or the Lakers. And if I could be wrong on this several years ago, and the NBA said, no, you can't do this. And it was like, well, why? And so trades can be, cut off by that start. Well, that's a little bit of the same kind of thing that happens. You always wonder how do they lock up some drug lords, money in some other way. It's because they have the routing system that goes through the whole thing and knows everything that's going on. And I mean, and that's where I struggle with this, with the point of the QFS. I mean, how would you talk about that one there?
So there's so many layers to it. There's a lot. Gosh, where do you even start to unwrap this onion? The central banking in and of itself is not bad. I'm not saying I'm a fan, because I'm not, but I guess as a theoretician, somebody who comes up with theories, I'm always looking at both sides of the coin. What's the argument for this? What's the argument for that? People don't realize that we've had central banks in America since the beginning. Yeah. We had the North American Bank, then we had the Bank of the United States, first bank, we had the second bank of the United States, then we had the National Bank, then we had the Federal Reserve. We've had central banks from the beginning, and we've had paper money since the beginning, and we've had seasons of fiat and seasons of species-based backing. Right. And so it's not like this is new. The biggest problem is the corruption. And if I could project and say what I hope happens, I'm hoping that the QFS provides the benefits of central banking without the potential for the corruption. And that's where blockchain can really play a role, because blockchain by nature is designed to be decentralized, self-governing. If we can have, our federal government was designed to be a decentralized government of the people, for the people, by the people.
Right.
That's the theory of blockchain. So if we can have our federal government and we can have our constitution run with the checks and balances that are blockchain level checks and balances without human intervention, that would be a perfect government. And the same is true with our central banking system.
Yeah. And so with that transparency in there, we start seeing that, that ability, but it's not just transparency, so that, the government has to have transparency with us, that they're doing this. And I'm not talking about knowing, when they're going to start, a battle or anything like that. We're not getting into that conversation. But what we're saying is that you don't get to like go off and, give arms to Afghanistan when we don't really want that to happen.
Right.
So it's a little Biden, clip there. So, and that's the struggle that I have in here. And I guess that's where I also get to when we come to this QFS to XRP or any other kind of thing, is ownership of the currency is a real problem. And this is what I don't want to see anymore, because we need to be under the banner of our constitutional republic. That's the thing that we look at, and we answer it for money with that thing too. And so that's, kind of the things I've been looking at too. How would you, do you want to frame that a little bit more? Or?
Well, I think what you're saying, I'm putting together two things from a few minutes ago and now. I think what you're saying is there's too many independent owners of XRP for this to be the currency of the QFS. Is that what you're saying? Because you would have too many, and it's like Ripple itself would have way too much too much central power, because they own half.
They would be the central power in that.
Exactly.
Right.
Exactly. So then you've had all these people on the internet that have come out and said, oh, well, the government's going to buy it all back, and they're going to buy it back at $50,000 a coin. Well, that's just not true. Like, where do they come up with this?
Yeah. I mean, there's not any evidence in that to that basis.
No, and plus that number would be, I think I did the math one time. It would be like 34 zeros after the one. I mean, it's so much currency that if that much money came in, then we would have inflation through the roof.
Right. We'd have a price inflation, not necessarily. I mean, if we talked about gold back, we'd have a price inflation almost instantaneously.
Exactly.
And that would be really, really bad. And I have some people that talk to me and say, no, everyone in America is going to get $100 million. And I'm like, oh, you have no idea how that makes no sense. Because, hey, let's go this backward. Let's say Jeremy goes, I need to buy hearing aids. Now, hearing aids are $2,500, $5,000, $6,000, and $7,000 for a pair of hearing aids. And so if I know that Jeremy walks in with $100 million in his pocket, because I know everyone got it, what do you think hearing aids are going to be? Well, instantaneously, just put a zero on the end of that puppy. They're going to be 25,000, 50,000, 60,000, and 70,000, right? And what I've done is that even though you have 100 million, I know that I'm going to put a 0 or 2 on the end of that. So you haven't changed the value of the price, but we've created an instantaneous inflation that will actually ruin the people with that too.
Yeah, and the irony of that is the people who are making that argument are the same people who are saying, I just spent $200 on a $100 trillion Zim note, and in exchange for that, I'm going to get my own $100 trillion, and there's not going to be price inflation. When exactly that's why the Zim note is worthless.
Yeah, I mean, and that's a difficulty part. Now, we do know that there will be a revaluation, with that too. And again, yes, we don't know all those things. I mean, we don't know some of that, but the real key that this is about is not for Jeremy to have, $500 million just for the heck of it. The real key for us is, and I keep going back to this because there are scriptures that have never really been fulfilled. The wealth of the wicked is stored up for the righteous. Yeah. That there are other verses that are just fascinating, and you cannot place them in any portion of our history. And I believe that we're about ready to walk into that. Now, when we do that, and we see that Jeremy now has the resources to do that, he can spread the gospel throughout the world. I mean, and because he wants to set up his family and everything else, but he's just not looking to buy the TVs at Best Buy. He's looking to say, what can I do to be able to do this? And that is one of the basis points that NESARA and the creators of NESARA is to do, is that, people, and we'll go back to Zimbabwe. Zimbabwe has been raped and pillaged 1 million times. And that's sick. And so we need to revalue their currency for them. So that's the key, I think, that happens in here. But there is the money to be able to do that revaluation, to be able to allow some of that stuff to come out to the people, because they're going to be able to drive these new projects that we need to do with that too. So how do you feel about that? Are you kind of going along there, or are you still kind of feeling it?
No, I agree with you. I think that, when you look back at all these countries that have been devalued, it is a crime against humanity. I'm not making an argument in favor of central banking in any way. No. I do see the benefits of central banking. And it's funny. I actually, even though I really I'm very solid on solid money, I actually really understand the side of fiat currency and how it helps, because the challenge that every banking system has ever had, if you go back through the 200 plus years of the US, every time we got to a central bank and we got away from it, it was all centered around the issue of elasticity. And the question that I have is, how can we get the culture to accept a completely sound money with zero elasticity when we've had now 100 plus years of this particular system where elasticity is the only thing that keeps us going?
Right.
And I still struggle to see how some of that's going to come into play. I don't know.
Well, and those are the $1 million questions, actually,
right.
That we have to deal with that. So I guess what I would say too is, what when you think about this, what are some of the problems that go in with the QFS? I mean, you sort of mentioned a little bit of that. What are some of the problems that they're maybe addressing, or that they're thinking through with the QFS gold-backed, kind of vehicles?
That's a great question. And see, this is the conversation that I wish we would have more of, because if you go back 100 years ago, people were having the conversation of what is money. And today, here's how effective the Federal Reserve System has been. And I'm going to make this argument in favor of central banking and Federal Reserve. It's been so effective that our culture doesn't have to think about, will the bank go broke? So it has served a very, very valuable role, so much so that people don't even know how to have these conversations. They don't know what elasticity is. They don't know what sound money is, because we haven't had to have these conversations. Up until the 1970s, when Richard Nixon took us off the gold standard, people were still worried about the bank going broke. And the Federal Reserve solved that. So all the corruption issues aside, central banking solves a problem. It gives us a currency that we can work with. And we know that when we go to the bank, we'll be able to take our money out of the bank. And if we need to go buy a house and we don't have the $300,000 for the house, we can go get a loan. And now we're $300,000 richer. If it wasn't for elasticity, maybe we should define those terms. What people don't realize, elasticity is the ability of your money supply to expand. And, we only have, if you look at what we call monetary base or M0 money supply, we only have like 6 trillion in the United States. That's how many dollars are actually printed, dollars and coins. If you go a step further to what we call M1 money supply, it's, I'm going off the top of my head, but I'm going to say roughly 20, maybe 25 trillion. In 2008, I can tell you in 2008, that money through the fractional reserve lending system had ballooned before the financial crisis to 800 trillion in assets that were collateralized. And this is from the Federal Reserve's number.
Wow.
Yeah. So those were the assets that were collapsing when people started doing foreclosures and writing off their homes and selling them for half. Over that 1 year, if you look at the chart from the Federal Reserve, that 800 trillion of collateralized assets got cut down to 400 trillion. And it did it in 1 year. That's where all those foreclosures were hitting. Well, since that time, that balance sheet has gone to 2.2 trillion. And so, sorry, not 2.2 trillion, 2.2 quadrillion.
Yeah.
And so that's the level of collateralized assets. The challenge that the QFS has is if we're going to monetize all that, that has the same impact of now just flooding the economy with $2.2 quadrillion. Well, then, okay, nobody has mortgages, nobody has any payments. Great. The wealth of the wicked is in our hands and everybody spends like mad. And the price of an automobile goes from 50,000 to 150,000 because nobody minds because they have so much money. So that's a challenge of trying to monetize all this debt.
Yeah, and I think that it has to be very gentle.
Absolutely, it cannot be at once. It can't be.
It has to be a gentle thing. So, for instance, someone who is, she's got a house and she's got 2 kids. I'm thinking of someone in my neighborhood. She's had a kind of a rough divorce, but she's got a good job. And even when we do the debt, the debt elimination points, and she's now starting to get ahead. And she's, but her money is gold backed at that point, and she's able to, she starts watching prices go down. She can kind of improve her circumstance with that, and she's making more, keeping more without IRS and all those other things. Those are all unbelievable things, and that's huge. That is this incremental growth point. Yeah. But every time that she does that, she does spend more money in the market. So when she needs to buy a hearing aids, she's not going to be fighting with it, which means that there are more people in the market in this particular market. There's more people in your financial market with that too. And it becomes a good thing. And that becomes a spinning ball that starts rolling down the hill instead of a flood.
Yeah, absolutely. And we're totally in agreement on that. And when Andrew Jackson did this, I don't know how much you've looked at bank cycles in history,
a lot.
Yeah. So when Andrew Jackson did it, they didn't just throw it out. It took about 5 or 8 years to roll this out. And we had that one period where we had a truly free market banking system, or somewhat free market. But what I was going to say is, people, this is an issue that I don't want to say I take it with you, but I kind of disagree. I disagree on some of the falling prices. Now, when Andrew Jackson did it, we did have a lot of devaluation and we did go back to gold standard. But I think the way this is going to go, this is just my projection here. Like my neighbor over here, they bought their house. I remember when they bought their house and she was telling us, they'd spent like $400,000 on it. And they're thinking, oh, I just hope that this value doesn't collapse. That's all they cared about because their entire net worth is in their house. Yeah. They are not red pilled. They are not like me. They have not studied all this. If you overnight say, well, your mortgage is gone, but your house is worth only $300,000, they feel raped and pillaged. So we can't do that. I think what's going to happen is maybe we wipe out the mortgages, and that's the first level where the neighbor says, hey, I now have an extra $2,000 a month that I didn't have.
Right.
Well, that's huge. 49% of Americans say they can't sustain a $400 emergency.
Right.
And so now we're going to have $2,000. You no longer have that mortgage payment. Yep. Now we're going to take that 15, 20, 18, whatever percentage of taxes that you're paying, depending on your income bracket. And where you give that to you, there's another couple thousand. Within a 6 or 8 month period, if people's income went up $1,500, $2,500, $3,000, that is life changing for them. Yes. And they can sustain that kind of improvement for a year or two at a time, trickling it in. And I think that's how it's going to have to roll out.
Well, I would 100% agree with you. I mean, some of these people are saying to us, and I mean, we're moving to all these cool topics, which I love every one of them. But
you're gonna have to break this up into like 10 videos.
Oh yeah, we could. But I think people will like where we're going here. We'll be done a little bit. Sorry, but I think you might be having fun with this too. But I think one of the things that when you hear people say it's going to go back to 1950s pricing, I'm like, stop. Because it can't. Okay,
it can't.
I'll give you an example. My parents, when I was 10, they bought a 1976 Ford Granada for $5,000. Okay, that sucker had window and AM FM and those little vinyl seats that would rip, and and so you're saying that my car now, that's a 2021, will be $5,000, and the answer is no. I mean, it's got 3,000 times more technology than that 1976 Granada. So how is it the same thing? And the answer is no, but there will be a slower roll off of these things, and it has to happen. Like I deal with having to buy my cost of goods through the manufacturer, and they're not going to roll back the prices tomorrow.
Right.
They've got to see. We're going to have to see these slow declines of these things as you see that kind of realm. So it just can't happen yesterday. So those devalue points. I mean, would you kind of go there too? Is that how you feel?
I think commodity prices can come down rapidly. I think that when you look at some of those kind of things, yes. I think technology over time, there's no question technology gets cheaper over time. That's just a natural evolution of how it works. But when we think about NESARA, when we think about QFS, when we think about these things that we're talking about getting implemented, any one of them can have such a radical impact that any one of these bullet points could provide 10, 15 years of stimulus.
Right.
So if all we did was got rid of the IRS, the amount of stimulus that would create would be unbelievable. It would fire the economy in ways it's never been fired.
Right.
If all we did was a debt jubilee, it would fire the economy in ways we've never seen it fired before. If all we did was stabilized the devaluation of our currency by having some sort of a sound of money, just that one thing would stimulate the economy in ways that we've never seen it stimulated in our lifetime. But the secondary effect of that, and if you've ever read Emily Schlei's book, The Forgotten Man?
Yep.
So, she talks about there's this person over here that nobody remembers, but the real premise is cause and effect. In economics, one good thing means something else is happening. Right. And so, we saw this, we're seeing it right now. I go down the street and I want to get something to eat, and it's 6:30 and the stores are closed because they don't have enough employees.
Right.
And I keep asking myself, why? Where did all the employees go? Oh, well, we can't find employees anymore because of COVID. I'm like, what are you talking about?
Yeah,
like where do all the employees go? How are they surviving?
It's up here. Yeah, they're given money for unemployment to keep going under emergency system.
They are given money, and here's human nature. Home. This is what Mises talked about. Human nature, human action is about what does it take to get a human to do something. When the government sits here and writes you a check, now we no longer have the employees into the system. Well, guess what? I don't care how much you hate the evil corporation. I like going and buying a sub. And I like going out and getting the things that are part of society. So if we suddenly surge the economy so great that everybody's doing extraordinary, we'll be miserable because nobody will work.
Exactly.
So there's a cause and effect that we have to think through.
Yeah, and I think that's why it's a gentle thing. But I had this one guy that was listening to me talk one time about NESARA and debt jubilee, and he was saying it's not fair. You just sort of initiated that with your friend down the street, right? And I was like, well, God's not fair. And he's like, well, yes, he is. And I'm like, God is just, he's not fair. And then, he was like kind of going sideways on that one with that too. And I go, listen, if it's fair, I would want to have what the other person has, right? I mean, right. Because that's what I think is fair, but you think is fair something completely different. because of your political, your background, your whatever, kind of things. And so, that this isn't going to be a fair issue, but we do have to deal with, the effect of the cabal, and we have to eliminate them. And part of the elimination is dealing with the Fed and cutting them off with this too. So the debt has to go away because it kills off what the Fed does in essence. And so that's this part. Those are just effects. Now we all have to like think it through with that too. But my last question to you is really, I talked to a bunch of money people, and I go, there are things that are inside of my ideology business and legislation that's going out there that I got to understand. Okay. And I've got to be prepared for them. And I have a response to that idea. How come money people are struggling with this idea of NESARA and the whole thing? How come they're not leading the charge in here?
Can I come back to that?
Yeah, go ahead.
I want to address what you said about fairness, because I've had this conversation.
Please. Yeah. Oh my gosh. Yeah.
Well, no, it's fine. I just, I've had this conversation with people, and I'm thinking of one customer that I have in particular. And I was telling him my thoughts on what I thought was coming. And he says, well, that's not fair. I've paid my house off.
Exactly.
And, why should such and such get their mortgage relieved? They were irresponsible, and I was responsible to pay my house off. And this comes back to the issue of why prices can't go back to 1950. If we were to wipe out debt and drop prices, then one person gets their mortgage paid off, another doesn't, but both are robbed of their wealth. If we wipe out the mortgages and prices stay the same, then the person who didn't get their mortgage wiped out at least kept their wealth. And that's why we can't erode the prices, because person A who paid their mortgage off, they actually don't need to know that person B's mortgage was paid. They just need to know that their home value maintained. And so that's why we can't go back to these 1950s prices. Now, will home values come down a little bit? Probably over time. Depends on what commodity prices do, depends on what building supplies do, depends on what demand is. If everybody's leaving California, Tennessee prices are going to stay high probably.
Right.
But maybe it'll trickle out to Oklahoma. I don't know. But fairness, I told him this is what I told him. I said, it's like grace. Just because you sin more, does that mean that, that was unfair? You got more forgiveness of sins than somebody else?
Yeah.
That's what it is. And so that's what Jubilee is. Jubilee is grace.
Then that's exactly what it is. But I also say there's a parable of the man that was the owner of the vineyard, and the first guy comes in and he's going to get paid $1,000. Let's just say, and it goes all the way to the 11th hour. And the last guy just works for an hour. First guy works just probably for 12 hours ish, and they all get $1,000. And he's going, that's not fair. And he's like, what do you care? I gave you the same thing I was going to tell you about. And I keep going back to those kinds of things. And I also say too, I mean, one of the things I say to guys like that is, bankruptcy. And they say, and they go, do you understand bankruptcy? There's the top two. The first one is divorce, where, he left her and she's going, I can't afford this debt anymore. And that we both did. And so she's filing divorce. The second one is medical. I just had a radical healing event in my life about 2 years ago where I walked out of the hospital in 3 days. And yet the first time I looked at these bills, I always sit over the trash can, and it's because they always rip up, it's all crud, right? When you get it. And I saw the bill, the initial top level, it was $142,000. And I was about ready to puke into the trash can until I realized what they had negotiated down to and that whole thing. But again, you don't know what other people are dealing with that's right. That situation too. So, yeah. And,
that's such what you just said is really like, that's my philosophy. It's what I really get frustrated with in social media is people are so quick to judge and so quick to project. And if we would just, as believers, if we would just chill and say, my number one job is to display the fruits of the Spirit. And we are warriors for truth. And I'm here to love and be kind and gentle. This whole, positioning for he's right, she's wrong, this is, it's like the problem with the Christian culture, in my opinion, of which I have been part of it, is there's this idea that we're going to build ourselves up so that we can prove that we have a more accurate theology or we have a more accurate this, but it's all me driven, and that's not God's economy.
Yeah.
And when I had that awakening that, you know what, there's nothing I can really do, and all of these churches, all of them collectively that I've been part of, have conditioned all of us to prove that I'm better than you, as though there's a reward in heaven for a better theology. There's not. It's all about just developing the fruits of the Spirit and being who we are. Yeah. I think if more people would just stop with the judgment, it's like the first thing is, are they right or am I wrong? Just stop that. Yeah. It's everything. It's not just morality. It's finances. It's fairness. It's all of it. Yeah. Just stop with it and let's just love people.
Yeah, exactly. And I think we're going to see some of that stuff. You know, we're going to have to fight through this. Is not like, don't think we're going into the millennial reign, because that's a bad theology. 100 million times over, but we're going into, I think, a pre-tribulation time frame where we're going to see some really cool things. But we are going to fight through some stuff, because people are going to ask that same question times 3 million, over and over again, and we're going to have to there's going to be some heated arguments until we realize, wait, this just happened. Sorry.
Yeah, absolutely. And we've been through this. I mean, history repeats itself. Have you seen the book, The Fourth Turning?
No, I don't know that one.
You really would enjoy the concepts of it. It talks about societal and generational cycles. Maybe we'll do another conversation about that sometime. But yeah, we're paralleled to the Great Depression cycle, and the cycle before that was the Civil War cycle, and the cycle before that was the Revolutionary War cycle, and we go back and back. It's about an 80 to 100-year cycle. We were smack dab in it. The book came out in 1990s, and it has prophesied exactly what we're going through on every level: politically, social disruption, economic disruption. And this is going to come back to your question you asked a minute ago, the thing that is critical to every fourth turning, which is a societal seasonal change. The thing that is critical to that is there's a war. It's a final war, of some war of finality. The terrorism war was not a war of finality. That's a third turning war where it's never quite done. World War I was a third turning war where it wasn't quite final. But World War II, society's on the brink. We have to win this war. And so society comes together. It looks like you're torn apart, but society comes together. They come together in a final, definitive way of beating the war. I think that war right now is an information war against the cabal. That's what I think is happening. There may or may not be a physical war that goes with it. We'll find out. But other things that happen in a fourth turning is old institutions die away and new institutions rise up. And I think what's transitioning here is this whole world of decentralized finance is in the wings. It's been going for a little bit. But if you go back to the last fourth turning, guess what was in the wings? The Federal Reserve System. It had just come in 1913, 1914. It had about 10, 15 years. We get into the Great Depression, and it was the years right after that where the central banking Federal Reserve System, as we know it, really conditioned and formed the world as we know it today. Decentralized finance is reshaping and forming the way that we understand the world. But to answer your question a few minutes ago, why are financial guys not on board with this? They don't get it. They don't get it. Did you see that commercial with FTX with Larry David? That was, I guess it was aired in the Super Bowl. I didn't watch the Super Bowl. Somebody said it was aired in the Super Bowl. I'll send you a link. He goes through history and all these different inventions. It starts with a wheel. This guy's like, I created this thing. It's a wheel. And he's like, what's that good for? It's round. Well, so are bagels, but you can't do anything with a bagel. And he goes through history, like all these great inventions, and he gets to crypto and he's like, I'm never wrong on these things. It's worthless.
I do remember that. Yes.
Financial people are notoriously cerebral.
Yeah.
They tend to think that the value of a stock is based on the fundamentals of the company. It's not. It's based on what people are willing to pay for it. Yeah. They tend to think that the use case of the crypto is going to determine its value. It's not. They tend to come up with all these things and try to put a calculation to it. And the challenge is, whose calculation is right? No one ever knows. It's all about what people think about it. It's all the sentiment that's behind it. And so these financial people who can't see it, they're just notoriously cerebral about it. And until they can understand it, right, they'll be late to adopt the wheel.
Well, and I think what I love about this as we kind of wrap this puppy up here is that I want you to see what two guys that don't think exactly alike we didn't come as, we have not always agreed on everything, and that's okay. Dialogue is more effective than being right. Does that make sense? And I think when we lose track of that dialogue, that response to one another, and going, I really need to understand this better, even though I don't always understand things. And the problem that we're struggling with is pragmatic truth. Pragmatic truth means that enough people believe the same thing, then I feel okay about being right with that. And the answer is, I don't need to have. I mean, if I walked into a third world country that never saw that, and they only saw the first part of the Super Bowl that Cincinnati was up, they wouldn't know the LA Rams actually won it on a last second touchdown, essentially. Okay. And so they'd be like, Cincinnati's got to be the best team in the world, and all this other, they'd be saying all this other stuff. And you'd say, no, the Rams actually won. And yet, what if everyone kind of climbed up there and said, absolutely wrong, you're wrong, you're wrong. I'm like, I don't care what you guys say. I know the truth of that. And that's called a veritas level truth. Okay. And I think what we're talking about here is that we have some pieces of the puzzle. We don't have all those pieces out there. We're dialoguing so that we can kind of learn this, and then we can kind of come on top of that so that we can have a little more information about how to guide and direct. And that's the best way to do that kind of thing too. So you have a last word in there too?
All I want to say is I learned many years ago through a lot of pain that one of the most powerful questions I can ask is, what else could be true? What else? And, I grew up in a very, very small denomination, very conservative, very dogmatic. And I went through many, many years of my life separating myself from other really, really wonderful people because I thought I was right and they were wrong. And what I have learned more than anything over the last 5 years in particular is there's just so much that we just don't know. And to pretend that we have to be dogmatic about it, it's better to try to prove what's not true than to prove what's true at this point.
Right.
If somebody puts a piece of information out there and we say, wait a second, that's known disinformation, why would other people immediately say, oh, no, that's truth, you're wrong? Well, wait a second, we've already proven it's disinformation. Why are you holding to it?
Right.
If people would just start with this idea of, okay, I also could have adopted disinformation, what else could be true? And just keep opening their minds to new awarenesses of what else could be true, then I think we actually get to the place where God wanted us to be to begin with, which was a state of discovery.
Right.
And he wants us to discover him. He wants us to discover the world. And to me, that's way more in line with what creation was all about.
Exactly. And I think what we're doing is we're discovering us, and we're discovering our place in the system instead of what we want to believe. Okay.
Yeah.
And I think that's the area that I would say also with money people is they struggle in their trust, and their trust is in their money. And people, there's two groups of people that talk about money more than anyone else. It's the poor and the very rich. And the middle groups don't talk about money as much. But by the way, all of us need to have conversations about money because we both know this one key. It is a vehicle, guys. Stop with freaking out about it. It's a vehicle from going from one place to another. And he used the train analogy. And that is something I would love people to kind of see with that too. So I just wanted to thank you so much. I really appreciate your time on here.
Yeah, great conversation.
Love it. And we're going to do more of these, guys. I think these will be really helpful for you to see this, because you need to be having that conversation with your family and friends. So if you like this, kind of like, subscribe, ask questions. We'll be happy to answer them. Thanks so much.